Volatility indices, like CME Group's CVOL, are insightful indicators of market sentiment. CVOL measures 30-day forward volatility across all option strike prices in key futures markets and includes a metric called convexity. Convexity is the ratio of CVOL to the market's at-the-money implied volatility, indicating excess variance in out-of-the-money options compared to at-the-money options. Higher convexity suggests greater market uncertainty. To understand what convexity can tell us about market sentiment, let's look at 3 examples of convexity in action. First, U.S. Treasury futures. Daily convexity across the yield curve from 2013 to 2022 highlights 2 key points. Convexity tends to be more sensitive in the shorter end of the yield curve, thus greater variance as yields may be moving higher or lower. In 2013, it was the taper tantrum when the Fed was reducing their quantitative easing, causing Treasury markets to move. In 2020 and 2021, due to COVID-19, supply chain shocks, and higher inflation saw increased convexity. As of early 2025, convexity fluctuated around its historical average of 1.06. However, in April, changes in U.S. trade policies caused convexity and Treasury yields to spike. Since then, convexity has remained high, suggesting greater uncertainty in future Treasury yields. While 30-year convexity remains stable, 2-year convexity is increasing, aligning with historical patterns. Second, British pound futures. On June 23, 2016, the UK voted to leave the EU. Leading up to the referendum, the British pound was relatively stable around 1.43. However, convexity declined to a low of 0.96, indicating the market was focused on at-the-money strike prices. On the day of the vote, convexity spiked, showing increased uncertainty and more activity in out-of-the-money options. Third, Euro futures. The convexity of Euro futures has been cycling around 1.05, its long-term mean and median, since October 2013. In August 2024, convexity increased as the options market was uncertain about Euro's direction. As the Euro futures bottomed in January 2025, convexity initially spiked but has since reverted to the mean, suggesting the market perceives less uncertainty in the foreseeable future. The next time you see CVOL convexity increase, think about what it may imply about market sentiment.